The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon. Dow's up 34 at 20,890. S&P's up 3.5 at 2366. Comp index is up 7 at 58.45. Gold is at this particular point, it's down how much? 7 at 1207. Silver is down a little, down 22 cents. It's oops, wrong one. Silver is right, jumping around. Silver, yeah, it's down 22 at 1707. You've got high-grade copper at, this is very interesting. See, so copper is at 256, down 2. Got crude oil down 40 at 49, it's down 1. And bonds are down 21 30 seconds at 147.07. And the dollar is how much higher? Dollar is, I'm looking over here. If I can just find it, I'll do it right now. So the dollar is up. Here we go. Dollar is TXY is down 10 cents at 101.97. It's got a kind of a little double top here. In the daily, we'll see that the weekly is still very strong. 120-minute chart, a nice turnaround to the upside after a pretty sharp pullback. I think that gold is really the issue. I think gold could have a bounce here, but I think it's going to go slightly lower. And the big test will be at that 12, in the 1290s, but 1280s better hold. Did I say 12? I meant 11. 1190s to 1180s. Most importantly, we're also looking at, I wanted to do this just to show the TLT. This is very important. The TLT is close to testing the left side low. And the left side low is 116, what was that? 116.80 back in the week of the 16th of December. It takes that out and it does not rally back above that within 2 weeks. That's not going to be very good. Look at the long-term chart. We're on the cusp. We're within cents of making a recovery high above 31.97 in the 30-year. That's the white chart right here. The brown one is the at 25.83, 2.583 is the 10-year, and all it has to do is to get to 25. Whoa, wait a minute. 25.90. I mean, we are a whisker away from breaking out on the upside in the bonds. If you look at this. If you look at the iShares of the Global Timber and Forestry ETF, it's making a potential peak F here, unless it can take out the high that was made last week of 57.65. It's at 56.35. Not far away, but it's turning down. There's going to be an issue, as well as what is holding very nicely here is the HGX, the Philadelphia Housing Sector Index. Had a call earlier on. I did Larry's show at 9 o'clock Eastern Time. Larry's traveling, so I did his show. I had a question about TELL, T-E-L-L. What's the wave count? Well, the wave count is that there was a peak G in the daily at 2174 on the 27th. Since then, it's just gone tumbling down, mostly successively lower lows. And what's really important is it's taken out the left side key support from the week of the 17th of February, $10 round number. It's gone to the nines already. The low today is $9.69. The 120-minute chart says it's cascading low. The stochastic is at 3%. So it's getting close to some kind of a basing area in the technicals. Wow. I spent a little time on this during the last, let me move this away. There we go. And that monthly chart, the seriousness of this leg C and now potential peak C in March is something quite serious. So Tellurian Inc., and it is trading at 10.12, down $1.21, down over 10%. look at the monthly chart. It has this U-shaped pattern. Whenever I see a chart and it says to me, hey, don't forget, I'm the one that makes those U patterns, or I'm the one that makes those arch patterns. I'm the one that always goes to a D or an E before I fail on the upside. I'm looking at this and I'm saying A, B, C. Let me just double check here, the monthly. Yeah, so the monthly, there's a cycle, and it takes years before it gets back to the cycle. That's what it's done. I wonder if I can just squeeze this to see when it started. Oh my! This has been going around. Oh, that's right. It was a different company and taken over, and I guess they used the same name or something like that. Oh, okay, back in. It just keeps going back. I'm gonna squeeze it even more. Squeeze. Okay, here we go. It still keeps going back. I've got this chart going back to 1974. All right. Wow, this is not a newcomer, folks. This has been around for quite a while, and it constantly has this U-shaped pattern. And the U-shaped pattern was getting shorter and shorter. Now it's getting lower and lower in the peaks. So the question is, what next? Where would it find some support? Once it makes the turn from this major up move, even if it's a B or a C, in the monthly chart, it just tanks. Oh, I know what it is. John, you asked me about this. I'm going to say to you, look at 9.11. That's the number that I'd be looking at. Let me just open this out a little bit. Okay. Yeah, 9.11 is really the key level to watch. Because if it takes that out, you're looking at 777. Where did I get that from? It's the 200-period exponential moving average in the monthly. I'm sorry, it's the 9-period moving average in the monthly because it's just about to take out the 200-period moving average. And if that fails, the daily is way down at 777, and the weekly chart is down at 674. I don't have any moving averages as support because it's taken it out. On the upside, there could be a bounce to the 50-period moving average at about $13. I would be really careful. In fact, let me put it this way. I wouldn't be in a rush to be buying this. What I would say is this is a chart that has advanced micro devices. I'm just trying to think of charts that have this really long-term move to the upside and a long-term down move and then a big sweeps. This is one of those. So TELL, T-E-L-L, trading at $9.99. We used to have a 99 restaurant around here somewhere. I just be real careful. I think you're going to have plenty of time to be able to do some homework, to be able to see if it can start a new move to the upside. And I would not be surprised. It's only been a week and a half that it's been coming down. I wouldn't be surprised if it's the last week of March. I wouldn't even be surprised if it's the second week of April. April, first week to second week is where it's already done its testing. It's had its bounce, it's had its retracement. Remind me again. That's when we'll look at it. And if it's higher, that's good. And if it's lower, that's bad. Just keep it as simple as that. TELL. All right. So a couple of things that I wanted to do here. So I wanted to show you something very interesting. So we've got the break coming up. All right, that'll give me a chance to set up. We'll be right back. Basil Chapman, Dow's up 28, S&P's up 3.5. We'll be back. Tiger Technicians Hour. I meant to mention the VIX is at 11.64, down 22 cents. Under the 13s, and it just seems to be buying pressure. I'll be back straight after this break.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman. So I had a question about Celgene, CELG. I was going to look at the IBB, but let's just go. Well, this is part of the IBB. That's the NASDAQ Biotech ETF. We're in a leg D at this point at 125.04. Whoa, leg D, what does that mean? Well, leg D, if I can just find it over here. Well, this is a leg D. In the Chapman Wave methodology, we're always looking for the lowest, most identifiable low bar. Make sure it's the low bar of consequence, and then it goes peak A, B, C, D. When it gets to the fourth highest peak, other things can happen. That's your objective. Then we can have instant restarts, or just a basic restart, just a whole bunch of things. So now what we're looking at is Celgene at I hadn't finished Celgene at 125.03. Look at this. There's a technique that I use. It's called I use a plumb line. It's a down. You look at a potential cup formation or an arch formation. You try to identify the low bar. Sometimes it's difficult, so you have to use candles of importance. I've used this candle at the peak D that was made from the high that news-related, whatever it was, must have been news-related spike. Oh, that was the election day, first day of the elections, where people thought, oh, great, now the biotechs might have a chance. And it spiked up from around about the 110s to the 127 round number high at peak B, became a big B minus, pulls back, has an inside A, B, C, D underneath of the long-legged doji, breaks, closes within 2 days underneath the doji low, one of the techniques I teach, and then it goes to a trough D. Now it starts another A, B, C, and it goes to a leg D today, and that leg D is again underneath the key round number high of 127.00. Now, this is the issue. Where do we stand? The question says, I've started a position here. It's like a starter position. Where do I think it's going to go? My thinking here is it's one of the leading IBB stocks at this particular point. It's showing strength. The weekly chart is good. It's not great. It's just good. And I think it will take out the 127. Well, it needs to take out the 127 high of the week of the 11th of November of last year. It needs to take and hold above it. Why? Because just slightly above it, you've got 128.39 from October the 30th, 2015, and then that major spike high way back in July of 2015. If I recall, that's when we shorted the IBB and dropped about 111 something points. Now, what I'm looking at here is that this cup formation it's within a rectangle. Rectangles say, hey, I'm in a containment area, and that containment area is very strong. This is kind of the containment area here, between that candle high right there. Not the all-time, not that big high that went to 140 something, but this high of August of 2015, the week of the 21st, and the number is 132 round number high. And the base, now I've got this big rectangle. Normally what I'd actually do is make this much smaller, because you'll find that these things stay in a containment area for quite a while. So that's the level I'd be looking at. That's got 112 support. This is the bigger picture that I'm looking at. But then within it, you've got yourself a really nice looking cup formation, more like a bowl because it's taking time. And that suggests that there could be another move to the upside. But this is really important. We are cusping. What does that mean? For me, it means that I've got sell modes in the down S&P dailies. I've got it in others as well, but I like to stick just for now in these two major indices. That's number one. Number two is, if I look at the weekly chart, let me go back here. So the weekly chart, if I was going to do a plumb line, I would then have to choose a different, look, there's no low here. I can say, look, if my eye says this is kind of the low right here, because there should be a move to the right of about 3.5 weeks. Are those weeks or what? Months. And that takes us somewhere to about mid-April, right? So I would have a little difficulty saying this is a mathematical left side number of bars to the right side. Now I have to use art, a little artistic analysis. So this is what I would do. I drag my the rectangle right there. I drag it along, and I'm looking and I'm saying, okay, I think I feel comfortable using that low. It's a low. It always has to be either a candle of importance or a peak or trough of importance. If I cannot immediately, I visually identify that I could do a trend line, a Chapman wave inside wedge trend line that would take me comfortably to where I want to go. Now, what I'm doing is I'm trying to look at the most number of bars going up. Look, resistance, 2-bar resistance, third bar, 4, 5 bars, 6, kind of 7 over there. So I feel comfortable saying, okay, if this is the case, here's my monthly chart or my weekly chart. Now, once again, I'm going to emphasize, this is not a mathematical formula. I'm using some of the Chapman wave techniques. There's a little artistic license. What can I say? I mean, you want to do something and you're not able to do it on a purely strict mathematical basis, then you have to use other techniques. This technique says, hey, I'm kind of comfortable looking at this. And I'm saying by the week of the 9th of June, 2017, if this trend line continues to act like a magnet, it's called the Chapman wave inside wedge target resistance line. On the way down, it's a target support line. I could see 140.72, the high of the week of the 24th of July, as a potential. At the same time, I'm going to add that this is a gray A because it hasn't broken out above that peak E over there, right? And that peak E could, in fact, also be a leg A to the upside that fails. Now we've got another inside count. So let's make it simple. I'm looking at this, and if Celgene takes out on the downside, it's at 119.56 in 3 weeks' time. If it hasn't broken anywhere into touch this candle of 130, it's way too high. The 128 to 129 area, if it hasn't gotten there, instead it's pulling back, and it closes under 190.57, 119. I'm going to make it 118.50. I'm going to give it a little room. If it closes on 118.15, I don't know if it's going to get there in that time. So far, the trajectory does look up. I like the fact that you took a position a couple of points ago down, and now you're looking quite good. Gives you a little comfort factor. That's my analysis. At the same time, the monthly chart says you are trapped within this area, this rectangle formation, and within it, you could certainly have a Chapman wave buy mode that takes you to a D in the monthly chart, and then look out. So I hope I've covered a whole bunch of the techniques that I know that you've also worked on. So let me just have a look. Okay, so here's a question on the USO. So the USO, wait, I'm on the buy. Let me do this. I'll go to the, who was it? Sandra, I'll come to you with the IBB in a second. With the USO. The IBB is making a pattern that I call Chapman wave falling X. It's just lower lows, lower highs, and much lower lows. And it expands, just an expanding cone formation. It's like it has the same function in a way of a down channel, but the fact that it's expanding is very much more important in my work. And that says, in the IBB, if there was a close, it's a 298.35 up 70 cents. If there is a close anywhere in the 301.30s, you could retest the high of 303.74. Right now, it looks like it's in a corrective mode technically, and I would not be surprised if in 3 or 4 days' time we're seeing it down to 296, 295 area once again. Basil Chapman, Tiger Technicians Hour. I'll be right back. Dow's up 11, S&P's up 2.5.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I was asked about Celgene. Does it need volume to go to the leg C? I think it was. Want to take out the daily C on the Celgene. I'm really looking at the week. I've already gone to the D. It's already gone to the D, and the MACD is getting a little toppy, and the stochastic starting to pull back. So I think that we could get a little pullback from here in the daily, but it's the weekly that really needs. I would like to see, if you're using volume, I think it would give me comfort to see the volume expand this week. It's very light volume, but I'm really looking more at the arch, the second arch of the MACD, that is saying to me, you know what? it's going up on the second arch of the MACD, but not the stochastic is only at 71%. So that's to me, that's much more important in my work, that I need to see a price move that takes it out. I don't care what it what instrument it's using, volume or Fibonacci or whatever. I want to see it tackle and then close above the high of the week of the 11th. That's really my issue. Okay, now just real quickly, the 2-minute chart. I'm not sure if I even showed it. There's your peak. There's your peak C1, C2 in the 2-minute chart. E-mini. This is the peak D. Look at the sharp pullback. Retest the green line, which is the 200-period moving average. Look, all of a sudden it's important. Before you could ignore it. Now you can't, and it's saying, hey, there could be maybe a little toppy D right here, but I think it's going to be stuck between 2364 for the moment and 23, maybe 68. If it closes over 2368, we might see a little bit further on the upside because we've had 5 days of the downside. Didn't expect a bounce, that's all. And a question about the VIX index. The VIX index. So this is what I'm looking at here. In the VIX index, you see we've spiked up and now we're down to the lows. This is just such a typical pattern. I'm still going to make it real simple. This rising trend line with lower low, I should type them in. So you've got 1030, that's the trough E at on the 27th, and then you've got 1055. Let me type that in so I don't have to keep looking at it. 1055 was the next one, higher, 10.55, and that was February the 7th or something, February the 10th, and then on March the 3rd. At 10.94, we saw another bounce. This is going to be really important. We take this out, it's just going to say, you know what? The Fed is obviously doing its work by supporting this market. It just doesn't want it to come down. It wants to be able to raise rates and have the market come down from a higher level. Let's put it that way. If it's going to come down, maybe they just want to keep pushing it towards staying over 20,000 because, closer to 21,000, so that if it does drop 1,500 points, it comes down from a much higher level. This is just my thinking. I don't know, but it's that we got until Friday. Friday at that's tomorrow. Tomorrow at 4 o'clock, we'll know where this candle. We have not had the VIX index close above the 9-period moving average more than once since that huge move back on the election week. It went to 2301, and then it plunged down to the lowest low recently of 10.30. So the question is about the. Oh, can I look at the VXX and the SOX? So I'll look at the VXX. We don't trade that. We trade a different vehicle. But you see what I'm looking at here, and let me do this. I'll make it a little bit bigger. This is really what you can't use weekly charts on these things. It's just they just you should have shorted it back at 70 in July of 2016 and just held it because now it's at 17. That's the way these things work. I haven't had any experience yet with shorting the actual this particular index. We really should take a chance. The next really big move in the VIX index when it goes to a nice up in the teens or 20s. After that, I think a short, we're going to have a practice session, practice shorting it. Okay, so 16.76 was the low of the 15th on the VXX, which is the S&P 500 VIX short-term index. Is this 1-to-1? Yeah, it's down. It's down 0.98%, and the S&P is up 0.13. So is this a 2 times or 3 times? What is this? iPath. I don't know whether it's 2 or 3 times. Whatever it is, it's trading at 17.13, down 17 cents. Oh, 17 cents, and that's called minus 1%. Well, that's what it is. Okay. So it goes to a peak B and it comes down. But this is the pattern that we're looking at right here. Comes up, comes back down, retests so far successfully. It hasn't broken the left side low, and that's very important. The left side low was $16.76. This low, the low of 2 days ago, was $16.87. So that says there's a chance that if the stochastic and the VIX the stochastic and the MACD could turn up, and this thing could close just once, it needs to close above $17.51 is the 9-period moving average. It really needs to close in the 1760s just once in the next 3 days. It's going to suggest very strongly. Finally, you've got some growth, expansion of the VIX. Otherwise, it's just going to be the same old, same old. It just gets crushed very quickly. So I hope that helps you, and I would make a tight stop. You can always come back in. We know that percentage-wise, when it drops really quickly, big percentage move. Be very judicious. We've done that. We are trying to keep our stops very tight because when this works, it gives you quick double-digit gains. But you've got to time it perfectly. Now, here's another question. Let's see. Is that a question? Oh, yeah. So let me look at the SMHs. So we're still short. We're short from 76. Let me tell you right now. 76.51. And it's trading just a little higher at 77.21. It hasn't taken, our stop is 1 penny above the peak D high. And it's already gone to an A and a B. This is a gray A, gray B in the semiconductor index, the SMHs. Now, the reason why I short is that the MACD was poor. The stochastic is really quite ugly. But I knew that the weekly chart is still holding extremely well. But if I compare, you see these vertical lines keeps comparing the technicals, and yet the price hasn't deteriorated. When it does, now I'm thinking that when the SMH really does take a dip, it's going to just take out 3 or 4, or maybe 5 left side candles in the weekly chart, because I'm looking at the stocks themselves, and there are now fewer and fewer that are really acting well. Some of them are really acting well, like Applied Material, one of the leaders in the field, new recovery high today. That's what's helping it. Leg D in the weekly, wonderful leg C. This is an incredible move up. I should listen to my friend who said to me, I don't know, Applied Materials they've got a huge backlog. Should have said, backlog, buy. Well, I didn't. But now look at it. It's at 37.40. No sign today even that there's going to be a turnaround. I think there's going to be a doji candle on Friday and a pullback on Monday, if I'm correct. And that would be based more on the technicals. It's going to be based on the 120-minute chart. A, B, C, D. Yeah, we're in D. Yeah, based on the technicals, it could be some kind of pullback. And until the semiconductor pulls back, until the IBB really pulls back. And what was the other one I said to my subscribers this morning? Oh, the HGX, which is the Philadelphia Housing Sector Index. Look at this. Until these 3 really key characters in the play turn around and say, et tu, Brutus, I don't think we're going to get a sharp pullback. We could get these lower highs and lower lows. So there's some strength here. Basil Chapman, Tiger Technician Sal is up 18, S&P's up 4. We'll be right back.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So just quickly, this is the 10-minute chart. Remember, I said I'm going to call that a peak D. It's a phantom peak C right there that coincided with what I was looking at in the 2-minute chart. Now we've got the fighting patterns. You've got the arch formation, the dreaded H on the right side here, which is also what I call a right shoulder failure pattern. You've got the rising Chapman wave inside track propellant support level. And all I can say is if it takes out 2364, it's at 2366.75, that's going to give a reading to say we're probably going to close quite weak by the end of the day. And if there's a push to the 2368 level, it says, hey, I'm not yet ready. I'm going to try to test the highs. My eye says right now, got to be a little careful. That's on the 10-minute chart, and the 2-minute chart says, yeah, look, I haven't been able to make my D yet. There's another peak C1, C2 potential, and the stochastic is good at 85%, but the price hasn't appreciably moved higher yet. It could if it flattens out. That's why I say you got to watch your stochastic over 80%, and the MACD is kind of okay. So we were watching this. My thinking here is we get a second arch formation right there on the 2-minute chart right here. Now, let's do this. USO. So crude oil has taken a real tumble, and got an email from someone who says, what do you think about USO? We have a position at 1203. Can we add some more here? So 1203 on the USO. Well, it's difficult to have 1203 when we're at 11:43 a.m. Just a little joke there. Just had to break the tension. USO trading at 10. Oh, we have a position. Whoa. No. You are trying to cost average to the downside. Your plan, I don't think your plan was to be buying it at 12, just over 12, and say, you know what, I love it at 12. I'm going to love it even more at 1044. You were buying at 12, I bet, and you were thinking, 12, it should go higher. That was the exact top that it had, 1203. Oh, top tick. $12. I don't know where you got 1203 from. We have a position at 12. Oh, you've had it for a while, I bet. You've had it for, okay. I have a rule, and my rule of thumb is if you're in a losing position and you wanted it to go up and it went down, you wanted it to go down and it went up, if it gets back to your price, or even if it's just close to your price, I promised myself I really try to keep this rule. I've done it for a long time. I think the 2 times that I didn't, I kind of hummed and hawed before I did anything. I lost more than I thought. It was just not that much, but it was more than I'd planned because I broke my rule. So if you have anything if your plan was to say, I'm buying it at 12 and I'm going to buy it again at 10 and I'm buying it at 8 because I think the USO, United States crude oil, is going to go to 14, I say fantastic. Then stick to your plan and buy a little bit in this area and then you come on. But if you bought it at 12 and it's gone down, now you're trying to cost average, don't do it. Your first position, losing position, is your best position. Don't add to the losing position. If it turns around, starts going up, you can rethink it and say, okay, nice. It's now above the candle of yesterday, above the low of 1062. It's trading at 1090. I think it's going to have an inside bar and could even move up a point and a half. I'm going to use that as a trade, a separate position altogether. But if it gets even close, you've got to promise me you're going to get out of the trade. You can get back into it in 10 minutes time. But then it's a new trade. It's not sitting on your shoulder like that, like the elf saying, woohoo, told you shouldn't. You don't want that. It just messes up all your trading. What I'm going to say is I would be very careful. I'm just going to say don't add to it. Let's look at it again on Monday and see what we would do. And I'll be able to give you a little bit more, at least from my perspective, advice. But I would, at this point, I'd have a stop, 1 penny under today's low of 10.39 for at least a part of the position. It's a position you can always make up. But if you have it too big, it makes it really hard to make up. I hope that helps you. All right. Now, let me just do this. There was another question I had, which I was going to get to. Yes. Okay. So the other question I had was within the context of the market itself. Just where are we before we run out of time? Oh, I've got Brent and Martinez. Brent, how are you?
I'm doing great, Basil. How are you today?
I'm well, thank you.
I was hoping to get your analysis on this stock. I don't have a position. I've been watching it for quite a while as it's come down to that low it put in a few days ago. It's like around 55 cents, whatever it was.
52 cents, yes.
Yeah. What I wanted you to take a look at, if you could, is if you go back, you probably have to be on a weekly chart, but if you go back to into 2015.
Yep, okay, let me give me a second.
Yeah, a low in August of 2015, a low in about May of
48 cents. August at 48 cents.
Yeah, then another low it put in about May of 2016.
At 51 cents.
Yeah, and then that low it just put in, a
52
few days ago.
cents. Right.
Yeah, so it's around that level. And I don't have a position, like I said, and I'm not going to do anything. They have their earnings come out this afternoon. That might be why the thing's moving a little bit the last couple of days. But I just wanted your analysis, just what you think about it.
So let's do a couple of things right now. The low that was made at 48 cents back in August of 2015, with all the turmoil and everything that Exco Resources, XCO is a symbol, trading at 0.70, up 9 cents today. That's a 14%. Remember, with the lower you go, the bigger percentage moves on the upside and the downside. Got to be careful. So this is what we're looking at. If I look at the monthly chart, immediately, if those who know my work, I just grab the left side low and I grab the right side low and I make it look like an arch formation. And then I check and I draw a straight line across and it says, hey, each time it's been pounded to the downside, it's held the low. That's a good thing. But what's really important is that this move now, this is what I'm going to say to you, Brent. I would treat this, it's already had the move today. It's up 70 cents. It's up 08 cents. If you had called me yesterday and you said earnings were coming out, I would have said to you, with the history of this stock, because I'd only tell you to buy a little bit, and 48 cents is the low that has to be taken out. That's big, 48 cents. That's almost like the 30% loss that you take if you bought it anywhere at the 0.60 area. I would have said to you, risk-reward wise, this thing could pull back and then start another move to the upside. If it doesn't take out the key lows of, say, 0.52, that would be the most important one. It would be a risk, but it's a risk that you could have played with an option. If you can get an option that's even priced right, I don't think it's maybe worth an option. But if it was like $17, that would be a great way to trade with an option. However, because of the percentages we're talking about, I think you're absolutely right. Let it play out. Two things are going to go on. It's not the earnings report. It's how it reacts at this time, at 11 o'clock to 12 o'clock tomorrow morning. Where is it? So let me do a little work during the break, and then I'm going to come back because I think you've picked yourself. I've got a doji candle from last week. That's what I call the silent doji. A lower low today. The stochastic starting to turn in the weekly. Hey, I think you got your eyes on something that's worth taking a little time on. I'll be right back with Brent in California. Down the
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back. So, Brent, we're in leg C, just above, right on, actually, the 200-period moving average and the 120-minute chart. The work you can see that I've done here in the weekly chart, I did in the monthly, but look how beautiful. This is like a mirror image. It's like when I was at the Science Museum the other day, we look at these different mirrors. This is fantastic. Look, you've got a left side price move from the, let me put it right here. Look, the low that was made on August the 7th of 2015 at 0.48, it went to a high of peak E the 11th of March at 1.94, huge move, a 300% gain. Then it pulls back sharply under the 200-period moving average, and wham, it runs up, but it fails to make a new high on the 13th of May at 1.91. Then it pulls back, and what I did is I used that pullback to call that all left side, and look what happened on the right side. As a perfect time match, it missed. Today it missed by 1 week, and it missed by 48 cents. So far, it's missed by 4 cents, making a low to the exact day. The stochastic is starting to improve in the weekly. The MACD is starting to improve. So I'm going to suggest to you, hopefully it's a nice bit of news, and it kind of pops up a little bit, and then it pulls back because its natural tendency is to keep falling. But if you can pick this up, but I would not pick it up if it's bad news and it really comes down. It's at 71 cents. If it closes in the next 2 days below 0.60, that's not good. But if it just pulls back a little bit to the 0.66, 0.64 area with fairly decent news, I would say you've got your eyes on something that has it's just the potential, because the weight of the downside move has been tremendous. But the way it's got that silent doji from last week, if it doesn't take out, it cannot close below 0.54. If it closes below 0.54, I wouldn't be touching this right now. But if it just pulls back a little bit on fairly good news, you might have yourself something that's your kind of stock that gives you an option of, not an option, I mean the choice of starting a position and then just lightening up on the way up, or if it holds well, you could add to it. This is the first opportunity that has done it. It might not take it. I'm just saying this is a beautiful example of a test of the left side, right side, going back 2 years. It's amazing. Yeah, almost 2 years.
No, it's great to see that. I like the way you charted that, Baz. I really appreciate it. Thank you so much for doing Tom's shows and Larry's show and your show and just all the great information you provide. So thank you very much. Have a wonderful day, and you take care, and I'll talk to you soon.
Thank you very much. Let's see how this one goes. XCO, folks, we're looking at XCO, and you could even think of it. It's just too much to have gone up 25, almost 48%, something like that. So this is, and it's still nothing because it's at 0.70. But I would still let it pull back, give it a little time. It's had so much to the downside. But this is the kind of thing I like to look at as a retracement. That's all, a trade on the upside. But being a weekly chart, that does say, hey, if it works out, could be very nice. Now, folks, about to wrap up. What's today? Thursday? Yeah, I'll be back with Tom a little later on today. And otherwise, I'll be on with my show tomorrow at the usual time, 11 o'clock. And just check out my my opening call newsletter. And, of course, love to have you listening to the show. Send questions my way. A couple of things I just wanted to do as we're wrapping up. The VIX index still hasn't shown sustaining strength. It has moved up. It's up. It's down just 3 cents at 11.83. I think that we're in a sell mode in the Dow and the S&P, which means that we should have limited upside. It doesn't say how much you're going to go down, but it's just saying if you've got limited upside, chop, chop, chop with slightly lower highs, slightly lower lows. That's what I'm thinking of to the downside. So keep in mind, the trend is your friend. And at this point, I think the trend in the short term is to the downside. The trend in the weekly chart still hasn't changed from being in a buy mode, and neither is the monthly. Have a wonderful rest of the day. Speak to you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.